Welcome to the September edition of the Galileo Monthly Update. It's the continued stage of lockdown. Thankfully, it seems to be easing and recovery rates are improving. So there are a few more smiles on people's faces now that they can go away for weekends. And Theo, welcome. It's still interesting times.
Yeah, it's interesting time. It is still not a true normal or whatever the new normal would be. But at least it's getting closer to a functional normal. And I think we just need to appreciate that from an economic point of view. If you look at our GDP in the second and third quarter of last year, and I'm not talking about the growth, I'm talking about the real GDP, what was produced by the economy. I don't think we will get back to that levels, not earlier than probably late 2022 or even 2023. Yes, the second quarter is going to be horrendous. GDP growth will be shocking. The third quarter will be a lot better. The fourth quarter a lot better. But it's going to take time to get to a kind of a normal level. And unfortunately, we'll have to go through this. Just perhaps as a nice indication, last week we had Absa's results. Because of write-downs, earnings down something like 92%. But the share price jumped 3% on the same day. So the day that earnings dropped 92%, share price goes up 3%. That shows you that a lot of this bad news has been discounted, but that doesn't take away from the effect that we are in a bad situation and we're going to remain in that situation for a number of quarters. It's going to take time to work through. But then again, remember, the market is not the economy. The market is something different. The real economy is what's happening. Underlying the market is looking forward, and our market is dominated by international stocks. So, yeah, it's uncomfortable, and it's going to remain this for quite a while.
So maybe just some context around what you're saying about Absa's results as well. I saw, I did a quick search on what the JSE's done, and for 12 months, from the end of August last year to the end of August this year, the JSE is actually up just over 4% for that 12-month period. That you wouldn't have predicted if we'd sat down a year ago and I'd said to you there's going to be a major global pandemic that's going to stop the world's economy, including South Africa, and we'll have the JSE up over a 12-month period. So you're right. I mean, it just shows you the diversification of that JSE. And just interesting as well, looking at the rand, as a range, the rand in the last 12 months has been as strong as 13 Rand 93, and I'm struggling to remember when it was there, and it's been as weak as 19 Rand 34. So that's about a 38, nearly 40% move in 12 months. I mean, the volatility of markets and currencies is just phenomenal, and I think it gives context to what we've been saying over the last 9 months. Not to get too excited about the good news or the bad news, and stay the course, because the ability to predict this kind of volatility and make sensible decisions, forecasting or prediction decisions in this kind of volatility is nearly impossible. So, Theo, I thought we should just touch on some of the issues that are happening around in South Africa at the moment. There's still a lot of pessimism, a lot of market commentators, spewing fear and loathing about the economy here, and then a few kind of rational voices coming through. And I thought particularly the article by JP Landman that was in the Fin24, for our clients who are watching, it's really worth just having a look to search for that if you can. Around corruption and what's going on. And I think, a couple of interesting moves or interesting events that have happened in the last 9 months. I mean, the first one is the massive body blow to the whole country, and I think in particular to the ANC around this PPE corruption, around the purchasing of medical and protective equipment for both the medical practitioners and the poor in our country, and just the massive scale of corruption that was seen, particularly at a municipal and provincial level, and so much so that it causes Ramaphosa to write a letter to the world, basically saying, the ANC has to hang their head in shame. And I think, we don't know what that means. We don't know what the outcome will be of something like that. But certainly, we've seen some fairly dramatic news from within the ANC at a national executive committee level and at a national working committee level as well, where they are making moves now and noises that we have not seen before around corruption. And in the past, it seems to have been 2 or 3 camps. One camp making noise about corruption, the other saying everything's fine and it's all normal. And it seems to me that there's a greater understanding from the ANC that this corruption is a real blow to them and that they need to do something about it. So, from our side as a business, that's not, we're not in the game of trying to predict political outcomes within a party. It's impossible to do that. But certainly the noise is the loudest we've heard for a long time against corruption from within the ANC. And I think the next few weeks are fairly important to the ANC to do something about that. At a government level, we can make a few more astute views, and we're seeing a lot more, action at a government level, both where they're using the SIU to reclaim money that's been taken from the state through parastatal corruption as well, and money is being reclaimed. We're seeing more and more civil action, which I think is really important there. And then we're seeing, people like the previous financial director of Eskom and Transnet being actually, having his CA designation taken away from him. And those kinds of moves, they're not landing in people getting into the orange overalls just yet. But I think civil action is always a good precursor to criminal action. And so, I think there are big moves happening there. And so from my perspective, certainly not saying that we've got this corruption thing under control. I think we're probably realizing that at a national level, the moves have been good, and there have been some concrete moves to resolve corruption and stop corruption. But certainly what we've also realized is that at a provincial and a municipal level, government has no understanding of the depth of problem, and I think the PPE showed that. And certainly now that needs to be the next steps, and we will watch and very carefully to see how that unfolds. And in our lives, not making big predictions there.
Yeah, and Warren, I agree with you. I just think that we're in a better position than we were. How it's going to play out, that is very difficult to say. But also remember that this is the second time in the history of the ANC that the president writes a letter to members. And I think that shows you how shocked they were with what's happened here. I think they were, and hopefully that will lead to proper traction. And I actually do think that remember, on the civil side, it's much easier to prove a civil claim, and those people are being destroyed. Their houses are taken away, their livelihoods taken away. They're going to spend years and years in court, and even some of them's pensions is on the line. So, although they're not in orange overalls, actually their careers and their positions have been compromised forever.
I think I think one of the issues we're all going to watch very closely is what happens with the previous mayor of eThekwini. That she's now been given a job in the provincial legislature, and it seems again that there is a backlash against that. And so it will be interesting to watch that unfold. And to me, that was a real contradiction to the public utterances of the ANC about corruption. So if she's removed from her position again, I think that shows the backlash continuing against corruption. If she stays in the job, it's hugely hypocritical stance of the ANC from a provincial level versus what they're doing at a national level. So I think it's stuff we have to watch. And watch fairly closely, but as you say, things are moving. The wheels are turning in the right direction. Yes, they could move a lot faster, but certainly the wheels of justice are grinding forward. I think it's interesting also just to talk about the parastatals in South Africa and the moves around there. We saw some news very recently from the Department of Public Enterprises talking about using the telcom model for SAA, and I thought it would be interesting for you to tell us a bit more about that, Theo.
Yeah, I think if we look back a number of years, or let's say probably best part more than a decade ago in the Thabo Mbeki era, or even before that, the government is very hesitant to use the name privatization or to use the term that something is getting privatized. But what they are a lot more comfortable is to get equity investors, outside equity investors, to take part in the risk and the return, and obviously the the input as shareholders into a model. And if you remember correctly, Telkom is today a listed company, although if you add the government's direct interest added to the state pension fund interest, it is still by far the biggest shareholder. But the point is, it's run as a business. It's making profits, it's paying dividends. In effect, if you just look at the size of the tax and the size of the dividends, it is an asset for government. And I think that the key there is, once you have private equity investors involved, there's a different set of parameters that becomes important. It's important to make a profit, it's important to generate a return, and it's important to pay dividends. So I think when government talks about shareholders showing interest, they need to appreciate, and probably that penny's dropped, that a shareholder has got a different perspective. The perspective of a shareholder is, what is my return on capital, and am I being compensated for the risk? And I think if you start to look in that area, it means that you will have a complete different managed operation. It will be run differently, and it will not cost shareholders the kind of funds that the shareholder, which was the government, the kind of funds that they had to pay up to now. Otherwise, you wouldn't find investors. The telco model today, yes, it is in the telco space. Yes, it's sometimes volatile. Yes, it's facing challenges. Yes, sometimes we have problems with it. But on a net basis, it is a profitable entity that's been paying dividends for quite a number of years and is being measured in terms of shareholder and shareholder value. So, and I think that all the way comes back to Treasury's strategy document of the third quarter of last year, where they talk about public partnerships and getting private money involved. So I think that's a step in the right direction. I also think that if that's the model, although it's taken a very long time, unfortunately, COVID probably didn't help anything, or perhaps it assisted in getting it to the brink sooner. But the point is, if that is the way forward, I think we could have a much better state-owned entity sector than we have currently. But Warren, if we go back and circle around to South Africa and our position in emerging markets, the JSE relative to markets, relative to emerging markets, you did some nice analysis on it, and can you share it with us?
Yeah, sure. And I think just quickly to wrap up on your other point, one of the critical things that came out in the last little while was the ANC, finally for the first time saying that they're not using prescribed assets for retirement funds. And I think that's a big fear that the market has had. Certainly, we've been worried about it. Unfortunately, lots of market commentators and newspaper headlines saying that it's going to happen. It's a certainty. Cash in your retirement funds, etc. And so it's been I think overdue, but we are happy and thankful that at least now that debate is put to bed, that if we're going to see a change to Regulation 28, it will not be prescribed assets. What it will be is an enabling of Regulation 28, in other words, retirement fund managers to choose wider ranges of investments if they want to, not that they are forced to allocate money to a Transnet or an Eskom or anybody. It will be about a choice. And worldwide, retirement funds love to invest in infrastructure projects. They don't like to invest in infrastructure companies, but where they can buy a share of a toll road project, or they can buy a share of a green renewable energy project that generates sustainable dividends, those are great investments for pension fund members and retirement fund members. So certainly the news around Regulation 28 also really good. And that ties in very nicely to the our follow-up view around the JSE. So one of the things that's interesting for us is always to price the performance of the JSE in dollars, because yes, we know the rand has been on a long structural decline, and so it's important to know if someone invests in the JSE in dollar terms, are they getting richer or poorer? And I think then to compare that to what a dollar investor would get out of the emerging market index and, let's say, the world stock market index. And so, what I did was I looked at the JSE's performance over the last 20 years, firstly. And over the last 20 years, if you'd put your $100 into the JSE in July in the year 2000, today, at the end of July 2020, you've got $499. So your $100 has gone to $499. If you put $100 into the emerging markets index, of which the JSE is a very small part, you would have $373. and then the world index, your $100 would be $283. And I must say, when I did that initial analysis, I didn't believe the numbers. I actually went from Bloomberg's to Morningstar just to double check, because that, if you think about the last decade in particular, and how much volatility we've had and how much the rand is pain the rand has taken, it just didn't seem to me that it was right. But certainly that has been the case. So that firstly, for those that say, you've become poorer by being in the JSE, that's not necessarily true. But I think the last decade probably gives us much more context. This is the Zuma decade, where we've had all the corruption and all of the nonsense that we've had to deal with. And interesting to note there that, your $100 in the JSE gets you $115 a decade later. So in July 2010 to July 2020, you've made $15 in by being in the JSE. Not a great return, but certainly when dollar inflation is round about 1 or 2% a year, it means that you've probably maintained value in dollar terms, not made money, but you've maintained value. But then we look at the emerging market index, and it's your $100 have gone to $143. So that's round about 4% or just over 4% a year in dollars. Not very different from the return of the JSE. And then the world index has done very well over the last decade. It's gone from $100 to $265. So certainly, if you'd been lucky enough, a decade ago to say, I'm going to convert all my rands to dollars and I'm going to put all my money in the world markets, you would have made a very good call. But when we make the investment decisions, it's impossible to make that kind of a solid prediction for the decade ahead, because especially the JSE's performance. If you look at the JSE and you look at the emerging market index, the pattern of their performance is almost identical. The returns have been very similar. And if you look at when they've risen and when they've fallen, the JSE and emerging markets have risen and fallen exactly at the same time, and with the same drivers. And so when we talk about the JSE in the next decade, that's going to be the point, is if we understand what will drive emerging markets to do well, then we'll understand why the JSE will do well. It won't be linked to the South African economy specifically. It won't be linked to corruption policies or restructuring of what the JSE or what their economy will do in South Africa. That will help, certainly, if the restructuring of the economy goes well here, the restructuring of the state-owned enterprises moves at the right process or right speed, then certainly the JSE relative to the emerging markets might do better. But if emerging markets do badly, the JSE will do badly. And if emerging markets do well, the JSE will do well. And I think that's an important thing for investors to understand, is when we talk about getting a balance between your local and overseas investments, we're certainly not saying to you that you should have all your money in the JSE or you should have all your money overseas. We're saying that you should have the right balance, and the balance is important here. And it's because when the emerging market cycle turns, the JSE will perform again. And that's our comment here always, is make sure you've got the right allocation, make sure you've got the right balance, and don't be too negative that because the economy is going badly in South Africa that the index will do badly. That's not necessarily the case.
Warren, then just perhaps on that point, in terms of our house view, just a few pointers in terms of our taking money offshore, local structure, just a few pointers on our house view.
So I think we're not changing our rand dollar exchange rate for when you should convert rands to dollars, and that's been consistently through most of this year has been 17 rand to the dollar, and so if you look at it now, we're looking at a rand that's actually a bit stronger than 17 to the dollar. So certainly we would be saying that when the rand is stronger and you need to increase your overseas allocation, then now is the time to do that. We would probably not invest all of those dollars into global markets in one shot on the other side, because we think that the international markets are incredibly volatile. The US, a portion of the US is quite expensive, so we would phase money into those markets over there. On the local side, we think the JSE is still in cheap territory, and certainly parts of the JSE are incredibly cheap. But again, we would be phasing money into the JSE as well over time. We are obviously not happy with the returns that investors are getting on cash. Where cash is only giving you 5% now, we would be quite light in cash. So certainly, it's important to have cash for the right planning reasons, but it's not a great place to store your money for long-term investment decisions for now. So on the whole, I think we would encourage a lot of balance, a lot of diversification, and don't send your money out in a panic when the rand is much weaker than 17, and do send it out with a sense of urgency when it is stronger, if that's what's appropriate for your financial position.
Well, thank you very much. Hopefully, after a very rough first 8 months of the year, hopefully we'll see slightly calmer waters towards year end. But I mean, there's no guarantees, and might not be political or economic events that will dictate it, but it might be more of a biological events. But all the best. We've come through this much. We've got 4 months to go. Summer's on its way, so let's see how things develop. Warren, from your point.
Thanks, Theo. Yeah, I think we've still got that minor little election in America that's going to drive markets wild until it's over. And I'd hate to make a prediction on what that outcome is. It certainly seems that the COVID issue is a big factor there as well. So we expect more market volatility driven by that. And then the sort of trade war between the US and China is an ongoing issue that needs to kind of get out in the wash. So certainly there will be a lot more volatility, but as a South African moving into summer with a lot more physical freedom again, that's a reason to be happy about the country we live in.
All the best. Thank you very much.